Welcome to This Explainer. If you've been following the markets lately, you can feel it. We are right in the middle of a massive transition. We're leaving the speculative hype behind and stepping directly into the era of actual workflow reality. To help us make sense of all this, we've got our silent analytical guide, Notebook Alan. Picture him at his desk right now, sorting through the data, ready to show us what is actually executing in the real world today. All right, here's our roadmap for today. We're covering the 2026 financial landscape, AI investing workflows, real estate's tech reset, digital assets, and finally, the absolute necessity of human oversight. Let's get right into it. Section 1. The 2026 financial landscape. Technology as the ultimate shock absorber. So, Morgan Stanley just put out this really fascinating warning for 2026, and it's simply be constructive, not complacent. What does that actually mean for us? Well, while U.S. growth is looking pretty solid on the surface, underneath the hood, pressure is seriously mounting in the credit markets. Companies are borrowing heavily, and I mean heavily, to fund these massive tech infrastructure projects. It's kind of like a double-edged sword. Strong growth, but propped up by a whole lot of rising debt. And here's the number that really puts it into perspective. $1.16 trillion. That's a T, folks. By 2027, Morgan Stanley estimates that AI infrastructure capital expenditure will hit this staggering number. So AI is absolutely no longer just a shiny, cool software trick. It's a massive global spending story that is literally reshaping corporate balance sheets right now. Which brings us to a huge macroeconomic shift. Investors are getting smart. They're moving way beyond that speculative software hype. The days of throwing money at any random ticker symbol with AI in the name? Instead, they are pivoting hard toward the physical infrastructure. We're talking data centers, power grids, advanced chips, the tangible, heavy metal systems that actually power the AI economy. Section 2. AI investing. Workflow over magic. Moving beyond blind prediction. Now, this is the question everyone always asks. Can AI pick winning stocks? You've probably wondered it yourself. But our sources are very clear on this. Treating AI like some kind of magic 8-ball for the stock market? No way. That is completely the wrong approach for 2026. The real value is not in blind prediction, it's in revolutionizing your workflow. Let's break down this critical distinction. Think of a strong AI tool as your ultimate research assistant. It helps you scan thousands of stocks in seconds, organize insanely complex data, and backtest your strategies. A weak tool, on the other hand, just feeds you answers. That creates blind dependence. You stop thinking critically, you get overconfident, and honestly, you end up overtrading. If you look at the platforms dominating the market right now, they all serve very specific purposes. You've got Bulk Quant, which is great for beginners needing guided workflows, or Composer for no-code automation. If you're an active trader, maybe you're using Trade Ideas for real-time scanning, or TrendSpider for charting. And then you have platforms like Tickeron, Danelfin, and Kavaut handling everything from quick signals to deep, quant-style machine learning. The absolute key takeaway here: you have to pick the tool that actually fits your specific personal process. Section 3. Real estate's tech reset, fixing the affordability and cyclicality crisis. Let's pivot to real estate. $11,600. According to Fannie Mae, that is the current cost to originate just one single loan. Let that sink in. With cost skyrocketing like that, non-bank lenders are waking up to the fact that just trimming a few expenses here and there isn't going to cut it anymore. The entire operational foundation of the industry needs a total reset. And the core issue driving this? Wild, unpredictable volatility. Originations can shoot up 89% one year and then completely crash 49% the very next year. It wreaks havoc on net income. The old playbook, hiring a ton of people during a boom and then firing them during a bust, it's completely broken. It's entirely unsustainable for 2026. So to survive this roller coaster, lenders are aggressively adopting what's known as the ADA quadfecta. That stands for artificial intelligence, automation, data platforms, and analytics. By using agentic AI, which are basically systems that can take independent actions based on your rules, and intelligent document processing, these firms are finally automating that slow, low-margin, manual paperwork grind that has dragged down the mortgage industry for decades. Section 4. Digital assets and tokenization. Utility over speculation. Moving over to the crypto side, let's look at stablecoins. From the SEC's perspective, these assets are increasingly governed by programmatic operations, meaning their value is maintained by pure code and supply dynamics rather than some central manager pulling the strings. Because they offer that functional stability, stablecoins have actually become an integral, everyday part of how modern neobanks scale and move money around the globe. And we're seeing a very similar reality check when it comes to real estate tokenization. Pundits love to enthusiastically predict that $4 trillion of global real estate will be tokenized by 2035. But the immediate reality right now in 2026? It's much more grounded. It's focused on secure, faster transactions and smart contracts that just eliminate heavy, outdated paperwork. We are moving past the hype of buying a fraction of a mansion on your phone and focusing on the reality of the digital deed to make closing a property faster and cheaper. Section 5. The Human Oversight Imperative, Orchestrating the Tools. Across everything we've talked about, a responsible workflow is absolutely crucial. Notice that a good process always starts with a human plan. You choose your market style, you build your watch list. Then, and only then, you bring in AI to filter that data faster, not to make the final call for you. Always, always test a system before putting real capital on the line, and define your risk before you enter. The AI provides the speed, for sure, but you provide the judgment. So, as we wrap up this explainer, I want to leave you with this critical thought. In an increasingly automated world, how will you adapt your own human oversight to maintain control? Because here's the truth. The technology is ready to execute, but the strategy, that is still entirely up to you. Thanks so much for joining us for this deep dive into the 2026 financial reality.